Most investors are staring at the wrong metric for layer 2s. They are obsessed with total value locked, completely ignoring the single most powerful fundamental indicator in crypto, the size of the war chest. Right now, Mantle is sitting on a treasury worth nearly $8 billion. That is not a typo. While other projects are running on fumes, Mantle has the capital to literally buy its way to dominance. But here is the problem. The chart is at a critical decision point. We just broke a massive multi-month downtrend, but we are currently struggling to reclaim a key Fibonacci level that separates a fakeout from a parabolic run. If we close below 82 cents, this entire bullish structure collapses. But if we hold here, the upside is mathematical. In this video, I'm going to break down the MoMNTum catalyst, the massive Bybit integration that nobody is talking about, and then I'll walk you through my exact trade setup, including where I'm buying, where I'm taking profit, and the exact price that invalidates my thesis. We are looking at MNT trading around $1.30. If you have been following the channel, you know I do not care about daily noise. I care about weekly structures, and right now, the weekly structure on Mantle is painting a very specific picture. For the last few weeks, price action has been fighting to break free from a descending trend line that has capped us since the all-time high of $2.87 back in October. We finally got a breakout in early December. That is the good news. But context is everything. Sentiment on layer 2s right now is mixed. Most are chasing hyped coins or old-school layer 1s, leaving solid infrastructure plays like Mantle in the shadows. This is exactly where we want to be paying attention. When the crowd is looking left, the smart money is usually positioning right. The price is currently compressing between major moving averages. It is a coil getting tighter. Usually, when you combine a volatility squeeze with a massive fundamental catalyst, you get an explosive move. And speaking of catalysts, the on-chain data suggesting what comes next is undeniable. Let's look at the fundamentals, because this is not just another ghost chain with high valuation and zero users. Mantle has shifted its narrative entirely with the MoMNTum campaign. They have evolved from just a fast layer 2 into what they call a full-stack on-chain financial ecosystem. The biggest driver here, and the one that makes me bullish long-term, is the integration with Bybit. This is infrastructure level deep. Bybit is not just listing the token, they are using Mantle as a core pipeline for liquidity. We are talking about an exchange doing over $77 billion in annual spot trading volume, effectively funneling users and liquidity directly into the Mantle ecosystem. Think about the flywheel effect here. You have nearly 1 million unique users who have traded Mantle on Bybit. They are offering trading fee discounts, launch pool access, and institutional perks just for holding the token. This creates a natural demand sink that other layer 2s simply do not have. Arbitrum and Optimism do not have a top-tier exchange hardwiring their token into every user interaction. Then you have the Treasury. Charged Ventures recently ranked the top crypto projects by treasury size. Mantle is sitting at number 1 among layer 2s, with a total treasury value of around $3.67 billion in their own token, and a broader treasury valuation reaching upwards of $7.9 billion. This reserves massive capital for ecosystem grants, liquidity incentives, and development. Technically, they are also pushing boundaries. They were the first to partner with EigenLayer for data availability, and they are migrating to a ZK validity rollup via the OP Succinct upgrade. This makes them faster and cheaper, positioning them perfectly for the real-world asset narrative that is heating up. When you combine an $8 billion war chest with institutional-grade tech and a direct feed from a Tier 1 exchange, the fundamental floor is incredibly high. Now, let's get to the truth, the charts. I'm looking at the Mantle USD pair on the weekly timeframe. Zooming out, the macro structure is actually an ascending channel. We have been respecting this channel since late 2023. Every time we touch the bottom of this channel, we bounce. Every time we hit the top, we reject. Right now, we are trading in the middle to lower section of this channel, which generally favors risk-reward for long positions. Let's talk about the moving averages. This is a battleground. The price is currently fighting with the 10 and 21-week EMAs. Those are the blue lines on my chart. However, notice where we found support. We bounced perfectly off the 55 exponential moving average, the purple line, and we are holding above the 100 exponential moving average, the yellow line. As long as we stay above that 55 exponential moving average, currently sitting around $1.10, the intermediate trend remains bullish. Now, look at the Fibonacci levels. I'm anchoring my fib from the October high of $2.87 down to the November low of 86 cents. We are currently getting rejected exactly at the 236 Fibonacci level, which is at $1.33. This is the resistance to beat. A weekly close above $1.33 opens the door for a much larger move. I'm also looking at the Fibonacci RSI. It bottomed out near oversold territory and is now curling upward. This often signals momentum shifting back to the bulls, but we need to be careful of a dead cat bounce. We need volume confirmation. Looking at the volume profile on the left, the point of control, the price level with the most traded volume, is way down at 60 cents. That is a concern. If we lose market structure, that 60-cent level will act like a magnet. But for now, the local structure is constructive. Here's my strategy. I'm treating the zone between 90 cents and $1.40 as my accumulation, or load zone. I'm buying spot positions here because the risk-reward makes sense. However, I have a hard line in the sand. My stop loss is a weekly close below 82 cents. Why 82 cents? Because that breaks the recent low and invalidates the higher low structure. If we close a weekly candle below that, I'm out. I'll not argue with the market. I would then look to re-enter lower, likely around the channel support at 65 cents. For take profits, I'm not selling everything at once. I'm scaling out. My first target is $1.60. Second target is the 618 fib level at $2.10. If we clear that, I'm looking at a retest of the highs at $2.80. My moonbag targets for the cycle peak are $4 and $6. I use a trailing stop strategy. If we hit $1.60, I move my stop loss to my entry price. If we hit $2.10, I move my stop loss to the first target. This guarantees I walk away with profit no matter what the market does later. So, here's the game plan synthesized. The bull case. We get a weekly close above $1.33. The Fibonacci RSI confirms the crossover, and the Bybit liquidity keeps flowing. In this scenario, a move to $2 is highly probable in the short term. The bear case. The general market corrects, and Mantle loses the 55 EMA at $1.10. If that happens, we likely test the 82-cent invalidation level. I'm betting on the bull case because of the Treasury size and the ascending channel support, but I'm not married to the position. This is a position trade for me. I'm buying low support and selling high resistance on high timeframes. I'm not holding forever. To wrap this up, Mantle is a cash-rich project sitting at a technical inflection point. The $8 billion Treasury provides a fundamental safety net, while the technical breakout suggests the momentum is shifting. I'm long here, but I'm watching that 82-cent level like a hawk. If you got value from this breakdown, destroy that like button and subscribe. It tells the algorithm you want more data-driven analysis and less hype. Also, if you want to know the second I buy or sell MNT, or see my intraday charts, join my free Telegram community. The link is in the pinned comment below. And I actually covered another high-potential infrastructure play recently that pairs well with this thesis. You can watch that breakdown right here on the screen. Thank you for watching, never financial advice, and I'll see you in the next one.